So without further delay, let me pass the ball. Jeff, I'm going to put this on your slides. I'll pass the ball to you, and let's get started here this morning. Thank you.
Thank you, Cynthia. And to extend your disclaimer, I'd just also like to point out that this presentation is purely educational and not forward-looking or advisory in any way. The reason we would like to touch on the consumer sectors here in Singapore and share some of this information with you is that there's a lot of relevance for this particular segment. The importance of Singapore and Southeast Asia, I guess as we also known as ASEAN, in the global stock market, it is quite important. If Southeast Asia's stock markets were combined, the US $2 trillion in total market cap would rank Southeast Asia as the world's 6th biggest stock market, placing it somewhere between that of the United Kingdom and France. Combined, our GDP of Southeast Asia is also similar at $2.4 trillion. And on the second, I guess, aspect of the relevance of Singapore and Southeast Asia is for investors is from the sector perspective. The regional sectors have become very important in recent years with diverse performances across these different sectors. It has not been just limited to declines in energy, to the defensive gains in healthcare, but we've seen specific different performances of the consumer sectors to the region benchmarks and differences in the performances of the cyclical consumer segment and the non-cyclical consumer segment. And therein lies the two sectors that we're going to be discussing, the two consumer sectors, consumer discretionary and consumer staples, as per the Global Industry Classification Standard. These are made up of, obviously, businesses that supply goods and services to consumers. Consumer discretionary being the first, its businesses includes both manufacturers and services. The manufacturing side pretty much covers cars, households, leisure items, in addition to textiles and clothing, while the services aspect includes hotels, restaurants, media, and consumer retailing. So the second big aspect of the consumer sector is the consumer staples, the more non-cyclical, more essential goods, and these are more focused on the food and beverage and other non-durable products and services, which can include, particularly here in this part of the world, plantations, in addition to manufacturers and packagers of food and beverage, all the way to food retailers. So I guess these are the two key relevant points that I would make this presentation relevant to international investors, and brings us to, I guess, a third important point, that the businesses of Singapore's biggest and its most active consumer businesses span all types of consumer type of businesses, from agri-food and packaged foods to hotels, resorts, cars, soft drinks, alcohol, media, as well as supermarkets. And while these stocks include businesses focused on Singapore consumers, there are many more that have a focus on regional consumers, and we'll share some of those statistics in terms of how much of our sector is actually facing Singapore and how much is facing the Asia-Pacific region and how much is facing the world. I guess the regional roots and the revenue reach of all these stocks do complement Singapore's international multicultural economy. It's home to many Asia-Pacific businesses as well as diverse consumer preferences. And as a group, our biggest consumer stocks listed in Singapore have also provided stronger returns to investors than the regional consumer benchmarks in the year thus far. So we're going to move into this sector, what we call our sector Quilt, which basically provides a measure of all the different sector performances in Singapore over the past 12 months. So if you're looking at I'll just turn the laser on right here. If you're looking at the top line, you can see the best performing sector for each of the month, and then on the bottom of the matrix here you can see the least performing sector of each particular month. So if over the past 12 months you look at the combined strongest sectors of each month, they all generated an 80% market capitalization weighted total return, and the least strongest of the sectors basically declined 49%. So this is showing you the regional sectors, I guess, as well as local sectors here, have become very important in recent years with those diverse performances across the different sectors on a month-to-month basis. And that has also been important for investors that are seeking to rebalance their portfolios according to their own sector trends and their own outlooks. Just to update, last month the market cap weighted total returns of the consumer staples sector came to 0.2%. That was in September, following on from this 2.2% gain in August. And the consumer discretionary sector gained 1.7% in September, which followed on from its 1.2% gain in August. So, as noted in the introduction, these consumer staple businesses made up of those businesses focused on food, beverage, and other non-durable products and services, while the discretionaries are including the manufacturers and services. So despite both of these consumer sectors consisting of consumer-facing businesses, they have performed differently over the past 12 months, as you can see. For instance, if you look at the consumer discretionary sector back in December 2015, it was the best performing sector versus the consumer staples, which was the least performing sector. So there was quite a marked difference in the performance of both those sectors for that particular month. And we saw that again in May, where consumer staples this time was the best performing sector and consumer discretionaries was the least performing sector. So the difference in the cyclicals and the non-cyclicals does play out. You can see divergent trends on a month-to-month basis. And as we go into the next slide, we see that how it all adds up over the last 12 months. You can see that consumer staples has been our best performing sector on a market capitalization weighted basis. When you're looking combining all the stocks that make up the sector, the consumer discretionary is at this point where it's generated a dividend inclusive return of 3.9% versus the 25.1% for the consumer staples sector. Our 5 biggest stocks of the consumer staples sectors have all gained in the year thus far, as well as in these first eight months of 2016 that this period covers. The leader was Thai Beverage, which became our biggest consumer staple player and our biggest consumer play in the year, in the course of this year, which overtook the market capitalization of Wilmar International, which has gained 7% in the year to date versus Thai Beverage's gain of 48.9% in the first 8 months. So this chart, rather than showing the performance of the past 12 months, it's just showing for the first 8 months of each year the difference between most of these sectors. And when it comes to looking at the Singapore market, the sectors do have a very important role beyond the benchmark because our Straits Times Index, which is made up of our 30 biggest, most active stocks in the market, are almost 50% weighted to our banks as well as 5 real estate management and development companies. And given the amount of weightage in those two sectors can have a big performance or a big impact on the benchmark. And as you can see in the first 8 months of 2016, real estate managers were off almost 1%, while banks were off 3%, which basically weighed the STI and built the case for investors over the course of those 8 months to look beyond the benchmark into the different sector performances. As noted, we have the 2 consumer sectors, which through to the end of September were actually the 1st and 7th best performers of the dozen sectors covered in the previous charts. On a market capitalization weighted basis, both sectors have outperformed their relevant global sector benchmark when you are using the MSCI indices. While Singapore's biggest 10 stocks averaged a 10% return in the first 8 months of 2016, which was double that of the 10 biggest players of the Asia Pacific, you can see going to the 10-year return, annualized 10% returns, the actual the stocks, the biggest 10 averaged a 10% return in the first 8 months of 2016. that was double that of Asia Pacific and very similar to what the average annualized 10-year total return of the 10 stocks has been for the last 10 years, which is also 10%. These stocks that are basically made up of Jardine Cycle & Carriage, Gunting Singapore, Singapore Press Holdings, Gunting Hong Kong, Thai Beverage, Wilmar International, Dairy Farm International Holdings, Olam International, Golden Agri, and Fraser Neave. And we're comparing the performance of these 10 biggest consumer plays in Singapore to the 10 biggest consumer plays of Asia Pacific, the likes of Toyota Motor, Japan Tobacco, and so forth. When you're looking at the return on equity, you can see that we also have averaged higher return on equity in the last 12 months, and a similar return on equity over the past 5 years on average. ROE, as you know, simply measures profitability of the company given the average outstanding common shareholders' equity, and given the ROE for the past 12 months was near 16% on average, it basically meant that for every dollar of a common share invested in those stocks, the financial return came to 16%. Looking at the valuations of the 10 biggest companies, your valuation of the 10 biggest plays were basically had the similar PE of 18.4 for the 10 Singapore stocks compared to 18.6 for the 10 biggest stocks of the region. Incidentally, the biggest stock that we have in our consumer sector, in our consumer sectors, is Thai Beverage. And just by way of introduction, if you're not aware of Thai Beverage, it produces and distributes alcoholic and non-alcoholic beverages in Thailand as well as internationally. And as of the end of 2015, its market cap was around 17 billion compared to almost 19 billion for Wilmar International. And as we mentioned earlier, in May, the market cap of Thai Beverage surpassed Wilmar International, and it basically now has a market cap of around 26 billion. Moving along to our next slide, which we're looking at the growth of the sector compared to the region. As of the end of August, Singapore's consumer sectors maintained a market capitalization of a little over 100 billion US dollars at 140 billion Singapore dollars. Like the Asia Pacific region, this was more than double the size of the consumer sectors from 10 years ago. The expansion of Singapore's consumer sectors did outpace that of Asia Pacific, growing by 2.4 times compared to 2.3 times that of the region. And as a sign of the times across the region, there are approximately 3 primary listed consumer discretionary stocks to every 1 consumer staple stocks. However, the consumer staple stocks do tend to average a higher market capitalization per stock than the consumer discretionary side. And this basically means that despite a much lower number of stocks, Asia Pacific's combined consumer staple stocks maintain almost 3/5 of the market cap of the comparative consumer discretionary stocks. The combined market cap of the primary listed stocks that make up Asia Pacific's consumer staples sector is 2.3 trillion Singapore dollars compared to 3.9 trillion for Asia Pacific's consumer discretionary sector. And I guess when you're looking at the different indices, we have a similar, the consumer sectors have a similar impact. They represent 14% of our benchmark index, the Straits Times Index. But for our FTSE Catalyst Index, which is basically made up of stocks that, or companies that don't necessarily have a long track record of business, but are earmarked for faster growth and come to list on the Catalyst board with a sponsor rather than through the main board, you can see that they have there's a big impact of consumer sectors in the FTSE Catalyst Index, and it does show you the growth of discretionary stocks in recent times, given this is a relatively newer board that we have in Singapore versus the main board, and that the number of consumer discretionary stocks in this index is 27 versus the 5 stocks that make up the consumer staple stocks. Looking at the most recent developments, our most recent consumer play to list in Singapore is Katrina Group. It's a relatively small company in terms of market capitalization, 68 million Singapore dollars. Singapore-based food and beverage group with multi-cuisine concepts, and the group's brands serve cuisines of different ethnicities ranging from Indonesian, Thai, Hong Kong, Chinese, Mexican to Vietnamese tastes, as well as catering to a wide spectrum of market segments. It has approximately a little over 30 restaurants in Singapore and 2 restaurants in China, and the company was incorporated in 1995. So that's been our most recent company to list. Before then, we had the reverse takeover and China Star Food Group, which debuted in April, as well as at the end of last year, we had Jumbo Group list in Singapore as well. Okay, moving to just looking at some of the core fundamental differences of the consumer stocks in our region. Consumer staple stocks do tend to trade at higher premiums to their earnings and book values. The MSCI Asia Consumer Staples Index trades at a PE, price to earnings, and PB, price to book ratio, which is approximately twice that of the MSCI Asia Index and the MSCI Asia Consumer Discretionary Index. So looking at a few other variables at the ROE and dividend yields, they are comparatively similar, and the MSCI Asia Consumer Discretionary Index has an ROE of almost 10% compared to almost 9% for the parent index, and Consumer Staples has a higher difference with an ROE of 10.4% to the 8.7% ROE of the parent. And do note that the Staples Index also has a higher dividend payout ratio, which is twice that of the discretionary stocks, as well as twice that of the parent. Just to put some industry perspective to our consumer stocks, as we noted before, we have approximately 140 billion Singapore dollars of market capitalization in our consumer sector, and looking across these stocks, there is multiple representation made in the 4 key areas of the traditional supply chain for consumer businesses. The supply chain, of course, starts with the upstream producers, the manufacturers, moving down to the downstream segments of distribution and retailing. The biggest producers are Wilmar International and Golden Agri Resources, as well as Olam International, which are involved in the production of foodstuffs. 2 of the biggest manufacturers of foodstuffs are Yixing and Del Monte Pacific, while the 2 relatively big beverage companies that span production and manufacturing are Thai Beverage and Fraser and Neave. On a similar note, Jardine Cycle and Carriage is a relatively big stock of the sector, specifically consumer discretionary, and that spans both distribution and retailing. The region has been seeing more vertical integration in the consumer sectors across the upstream and across the downstream activities. Within the business, we've also been seeing I'll skip the slide. We've also been seeing the supply chain, in effect, be disrupted by a number of drivers. We've seen the traditional chain of sourcing and supplying being disrupted by the consistent change in income as well as consumer tastes and preferences, and in a
Oh my, everyone, please hold on right now. It looks like Jeff has lost his audio connection. So I'm going to be right back with you. We'll try and get him right back in.
Thank you so much. Apologies to everybody. Looking at the evolving supply chain that we have been seeing how traditional businesses deal with the sector drivers and disruptors, it can basically shape new comparative advantages for the companies as they look to move with these opportunities and challenges that the drivers, the disruptors, are bringing to the different points of the supply chain. For instance, for the sources and the suppliers, we're seeing that the consistent change in consumer preferences, meaning there should be more importance in the big consumer-centric data and analytics and proprietary surveys, which we see a lot of in terms of gauging tastes and preferences in the region. For the manufacturers, we're seeing the innovation and technology changes that are coming with robotics and 3D printing challenge how the traditional factory lines have been operating in the past and how those factory lines are located and operated from within the region. And also from the traditional aspect of distribution and logistics, the urbanization of the region, as well as the challenges or the opportunities that e-commerce is bringing to retailers. We're seeing that there's a lot of collaboration efforts going into corporations, agencies, and institutes working together in order to become, I guess, more consumer-centric and be on top of the consistent changes that is coming with the modernization of the region and the changing consumer preferences. Online payment systems have also been a big focus, as well as, of course, social media. Just to show you in this slide, we also have just noted the biggest revenue stream for each of these biggest companies that make up our consumer sector. The 10 biggest companies here and the next 20 biggest companies by market cap here. And as you can see, there is a very big wide range of revenue streams. However, many of these key drivers and disruptors are applicable to many of these consumer-facing businesses. Looking on to specifically how e-commerce is affecting the region in terms of traditional drivers for the sector, before we move on to the e-commerce, Singapore's population is up a third since 2001, and there is still an average of more than 1 million tourists that visit Singapore per month. This is important because more than half the revenue associated with the sector is actually reported to be generated here in Singapore. And also important is the Asia-Pacific overlay, which we'll look at very soon. But just a little bit more on the traditional drivers. If you look at Asia-Pacific's population, it's also been growing significantly. As you would be aware, it's near 3.7 billion people at the moment, which is an important fact for these consumer stocks because while they do average half their revenue to Singapore, a third of the revenue comes to the Asia-Pacific region, excluding Singapore, for these Singapore consumer stocks. Asia-Pacific also has regional consumers at all income levels. Consumer behavior and preferences have been changing rapidly with the demographics, and between 2008 and 2013, the growth in Singapore's discretionary spending significantly outpaced that of the essentials. I think real expenditure on the discretionary services surged by more than 60%. And for the capital formation of the in the consumer sectors, as you would be aware, they've accounted for a quarter of the world's IPO value over the past 5 years based on Bloomberg estimates, and of course the largest IPO of this time frame was the consumer discretionary play Alibaba Group Holdings. And as noted in the previous slide, e-commerce has emerged as a key driver for the consumer sector. According to a recent report here, which was published by Google and Temasek, there's a projection of 124,000 internet users coming online every day for the next 5 years in Southeast Asia, with approximately 480 million users by 2020. And there are expectations that the internet economy in Southeast Asia may reach $200 billion by 2025, with e-commerce and travel making up more than 90% of the total online spend. So there's, I guess, a big kind of digital transformation occurring here within the region that we are seeing. But in sum, I guess the three unique regional growth drivers would be that when you're looking at the population, 70% of our region, Southeast Asia's population, is below the age of 40. The number of retail stores per capita is a quarter of the same ratio that you see in the United States. And our GDP growth of 5+% over the next 10 years does generate, as you would be aware, a rapidly growing middle class. So enough for the drivers, just to look at some of the recent performances of these stocks that are facing both Singapore and the region. As noted in the previous slide, Thai Beverage produces and distributes alcoholic and non-alcoholic beverages in Thailand and internationally with a market cap of around 26 billion. And Cycle and Carriage engages in automotive, financial, heavy equipment and mining businesses, as well as agriculture, infrastructure, logistics and others. The reason I mention that is because in the year-to-date, or in those first 8 months of 2016, the best year-to-date performers among those 10 most active consumers, biggest active consumer stocks, were Thai Beverage, Jardine Cycle and Carriage, and Olam International. And Olam International is engaging in the sourcing, processing, packaging, and merchandising of agricultural products. For the next 20 biggest plays, the highest returns were generated by JAPFA, Accordia Golf Trust, and Sheng Siong Group. JAPFA is an industrial agri-food company which produces and sells dairy, animal protein, and packaged food products in Asia. Accordia Golf Trust is a business trust specializing in investments in golf courses, driving ranges, and golf course-related assets in Japan. And Sheng Siong Group operates supermarkets in Singapore. Its stores offer live, fresh, and chilled produce such as seafood, meat, and vegetables, as well as the packaged, processed, frozen, and preserved food products, and of course general merchandise, including those essential toiletries and household products. So you can see there has been a degree of diversification in the performances. There have been some outperformers. There have been some laggards. Many of these stocks are facing not just Singapore but the region, and these are basically our biggest of these stocks. If I move forward, as we're at the end of our time, just to note that the most active consumer stocks by turnover in the last 3 months or so, up to the end of August, we can see that you have Wilmar International, Jardine Cycle and Carriage, and again Thai Beverage, which are also part of the STI, being our most active stocks by turnover. In terms of best business returns in the consumer sector, the highest 12-month return on equity amongst the 10 biggest, most active consumer stocks were Gunting Hong Kong, Fraser and Neave, and Dairy Farm. Moving along to the highest dividend yields for the 10 big plays, these are again these 10 big stocks that have averaged that 10% gain in the year-to-date, as well as 10% average annualized total returns for the past 10 years. Three of the highest dividend yields associated in those 10 stocks: Singapore Press Holdings at 3.9%, Olam International 3.1%, and Dairy Farm at 2.7%. And just coming into the conclusion, I do want to note that, renote I should say, that Singapore does provide regional consumer perspectives and plays. If you look at our regional confidence, which is represented by the MasterCard Consumer Confidence Asia Pacific Index, for the first half of 2016, there was basically reported no change in consumer confidence from the second half of 2015. The gauge was at a level of 59.7, which is at the high end of neutral, with a level above 60 representing the optimistic threshold. The gauge is basically built on a consumer survey which asks respondents 5 questions pertaining to their 6-month outlook on the economy, employment prospects, the local stock market, regular income prospects, and a key question of the quality of life. It's calculated on a percentage response figure where 0 is the most pessimistic and 100 the most optimistic. And as you can see, Singapore in this MasterCard consumer confidence has moved pretty much in line with the region and provided a bit of a proxy for the trends of Asia-Pacific, which you would expect with our high international multicultural economy. And it's also, of course, as we say, very relevant to our sector because, as we say, you can see a little over 50% of our sector reports revenue to Singapore, and just over a third of the revenue is actually reported to Asia-Pacific, excluding Singapore, and then 10% to elsewhere in the world, which is basically Europe and the United States. You can see we've listed the companies here, the biggest companies that are basically giving you exposure to these different countries, consumer plays across these different plays. And I will move into the conclusion because we're getting a few questions come through just now. Just to sum up, we've got over 150 primary listings here in Singapore that do make up both our consumer staples, non-cyclical, as well as consumer discretionary cyclical sectors in Singapore. We've grown pretty well for the last 10 years. We've outpaced outpaced the growth of Asia Pacific, with our sector growing 2.4 times versus the region growing 2.3 times. Most of our plays are consumer discretionary, which is in line with the trends and the economics of the region. And I guess on a day-to-day basis, these stocks are turned over to an extent that they represent 15% of our day-to-day turnover. And do remember they represented also around 14%, 15% thereabouts of our STI benchmark. And for the sector leaders, those 10 biggest, most active stocks of Singapore's consumer sector, they have averaged annualized 10-year total returns of 10%, which has outpaced the region, and they also have generated good returns in the first 8 months, similar returns in the first 8 months of this year, also outperforming the region. So I'll just come into a few of the questions. The first question was on how have the net inflows been into the consumer sectors into the year to date. For those, I guess I've got data for the first 9 months of 2016, and for the institutional flows into the sectors was net positive for consumer staples and net positive for consumer discretionary. It was around 240 million net positive for consumer staples and up 60 million net positive for consumer discretionaries. Another question is if we buy one of the dividend-paying stocks quoted in SGX, is there a withholding tax on dividends deducted by Singapore government? You can assume no, the Singapore government won't be charging withholding tax on the dividend, but I don't know what the US government or where else in the world you might be, what they might be paying, what they might be charging you for tax. But you won't be, if you're an individual investor, won't be paying tax in the capital gains tax to the Singapore government on the dividends that are earned on these stocks here in Singapore. What are the stocks listed on the US stock exchange, which is considered as a buy? I don't actually have the broker reports with me that basically give that information. We are an exchange, a Singapore Stock Exchange. If you would like to know which stocks, which of our local members here in Singapore have views on the stocks, whether they're a buy, a hold, or a sell, you can go to SGX My Gateway website, the SGX, I think it's sgx.com/mygateway. Look at the broker section there, and we publish a number of broker reports which get updated every week, which will provide you with a comprehensive report on each of these particular stocks, and they're, of course, free of charge for you to look at. Alternatively, you can be a subscriber to the SGX My Gateway report, and and that will enable you to get the update on the broker reports, which go through on a month-to-month basis, which are updated on a week-to-week basis. So again, I'd encourage you to have a look at the My Gateway website, which is part of SGX, www.sgx.com/mygateway, or go to sgx.com/research, where you can also find a number of these PowerPoint presentations and download them if you wish to be, because I can see another questions come through there on how to download the PowerPoint presentation. We have a very similar presentation to this one, which is available to be downloaded at that sgx.com research page. Alternatively, I'm sure Cynthia can provide more details on how to download this PowerPoint presentation on WebEx. And that's all from me, Cynthia. Thank you.